We are in the house. Good morning. Good morning. Good morning. Wow. What? Is this just me, or is like every single Monday is crazy? Hims is wild. I haven't seen Hims today. I'll take a look. Dude. Well, if you were bullish, I don't know. Looks like we've gone a while. We gone a ways, man. This market is absolutely insane. I just don't even know what to say. I'm gonna get this setup loaded here. Just a minute. Man, welcome. By the way, every Monday, if you're new to the show, every Monday, what we do here is we kind of like go over what happened. If you didn't know, what's up, Savage? If you didn't know, yeah. Tariff rollback, baby. That is the theme of the day. We'll see if this price action holds. I'll just say this: the market, I think, needs to get reset, or is not. I think like the market is resetting itself, right? This one is just insane. Savage. I was bearish and paid for it. You never expect that. The charts, I'll just say this. The charts were like, not really sure. But it kind of came down to another tweet, man. It came down to Trump's tweet, I think last week. And, he did say, this is a good time to buy stocks yet again. And sure enough, the market likes the headlines, at least for now. We'll see. I don't think we have anything really definitive on the China tariff front, but what's true is that the market's catching a bid, and as of this moment, it hasn't really pulled back very much at all. Like maybe a couple points, but that is it. I'll say this: 580 was in the bingo cards for me. But if we had gotten there too fast, meaning if we got there at some point last week, I would have been like, this is something you definitely need to fade. But because last week was so sideways, I think the market had a minute to digest. And here we are, right? I don't know that you need to assume that the market pulls back here. It's just getting reset. Huge gap. I mean, absolutely huge gap over the weekend. Let me see if I can get this slideshow ready for you guys. See if I can share my screen here. And it's just going to be me this morning. Never ignore the Trump signals. Yeah, I mean, what can you say to this one? It's just, he just gave it. And I think people heard him this time. Nobody was like, I'm going to forget it. Forget TA. Just follow presidential orders, right? You got to go out and buy stocks now. I mean, that's what he said. Also true is like, where we're coming from a volatility perspective, my sentiment has been like, look, this is COVID level volatility since the beginning. This is very much COVID level volatility. We'll say from the lows. I almost think, does anybody know, has this recovery been faster than COVID? Because I did not personally expect to see a complete V recovery. But here we are. I mean, this is not exactly a U-shaped recovery. This is very much a V at this point. So it's been wild. Uzi, yeah, I do TA on True Social now. It's funny, And then what was his last tweet? I think it was Friday or something this weekend. Maybe he was like, "This next tweet I'm gonna post, the next truth I send is gonna be, historical." And it ends up being about pharma. So, is it the same V shape as COVID, Victor? I mean, it's interesting, right? 6 times Donald said buy stocks. Yep, is a win. I believe it. And here we are, right? We're very close to the highs. Tariff rollbacks, man. There's nothing more. This time, we do have CPI tomorrow, by the way, and we do have PPI on Thursday. But quite frankly, I don't think that any of that's going to matter. The craziest part was that during the FOMC last week, when J Powell took the stand, or when he was doing his speech, I was like, you know what? He was a lot more hawkish than I expected, and I think that anybody else expected. Hawkish as in like, yes, he paused, but his sentiment around needing to drop rates or cut rates was like basically like, I don't like, it's not on me, right? It's like, not on me, dude. I got to see. We have no idea what's going to happen. He did kind of allude to the fact that like things can change and he has no idea where the tariffs are going to hash out in terms of the impact to the actual economy. But at the same time, it's like that's when, again, the bears had all the opportunities to take the market down and they just, they just couldn't do it no matter what. And it was a pretty hawkish FOMC. What's up, Mel? What is up? So that's what happened last week. I mean, in terms of headlines, look, it's just U.S.-China agreement to slash tariffs for, I think, 90 days, major trade breakthrough. We still have to see what's going to happen from here. It's not like a signed deal. We did have a signed deal with the UK. So that, I think, is the first major trade deal that we did get. And most of the comments this morning from Trump on his press conference, like the actual announcements, was just like China says it will open up to U.S. business. So we'll have to see what that means. Again, I'm not really sure what that actually means. And that's maybe why I think the market might be taking a little bit of a breather right now. But again, quite frankly, it's really not that much of a breather. Monthly seasonality, look. May has been decent this is actually 100 years, last 20 years, but overall it's kind of flip-floppy. We'll see. In terms of seasonality from a 4-year cycle, we are actually closer to here. So we're not quite at all-time highs yet, but at this point, I got to be honest, man, I don't see, if we don't pull back, this is no longer a bear market. That's true. And look, if we don't pull back, then I don't really see how we don't get back to all-time highs. God, did I just say that out loud? I hate to do that. But that's kind of what the charts are, your bearish sentiment, your bearish potentials. And I'll just pull this up real quick. Your bearish potential outcome is pretty much gone, right? So like from a trend count, and I'll just do a weekly, right? So this is the trade war zone down in here. I have some other levels back down here. This is the 20-day, 50-day, those blue and white lines. This is a prevailing downtrend here that has definitively been broken, right? We got a little bit of a breather week last week, so a very flat week. This week, man, we are hanging strictly over the 200-day simple. It's not, to me, this is not a spot where like I can't in good faith be like, oh, okay, I'll chase it. I just cannot, right? This is, again, but the weekly trend count, I'll take this line off now. If this was right here, your last weekly lower high, this is definitively what we call, this is not a break of structure. This is change of character. As long as we're holding this major zone, and this is a major zone, right? I can bring this all the way across. We can see where this was on a weekly perspective. We're completely over it and well outside the trade war zone, which I think at this point can kind of like go away. Weekly oscillators also setting up for some type of a squeeze. So that said, we're back in this box, which we haven't been for quite a while. So as long as we're holding this level, I'm like, oh, geez, this is, we're right back to where we were. Actually, higher than where we were on Liberation Day. Wow. This is all my fault. 4 stars on Yelp. Stop it. And yeah, the market wants higher. So we could say the pain trade is higher if you are. And this is the bummer piece, because we really never did get a proper retest. Because again, we were looking for, what I was looking for, what would have been a nice proper retest, was some type of retest of those trade war levels. And we just went straight across. So a tough one again. The only way that this can go back to bearish, but even then it's not, is if when if and when you do lose the 200-day simple moving average. But again, now you're still stuck looking for this kind of what we would call like higher low, right? Which happens to be basically where we were around last week. So 565 from the weekly trend count here. This is if we were to get a red week next week, let's say the tariff deal is not as good as the market is expecting, it's still gonna mark a higher low any way you slice it. And the problem with this is that I think the market knows, right? The market knows that, hey, look, any pullback is essentially gonna be buyable. What's up, guys? Joe, June, both in the house. Any pullback is going to be buyable. And so what's happening, though, is the pullbacks are getting bought up so fast that they're, barely visible on the charts. So I'm going to move this back down to a daily scale really quick. Again, right back into this prior kind of growth scare. 575 was that real line in the sand where, like, anything under that could have been choppy, but here we are gapping above. Does that mean that we can't retest it and come back to 565 and still hold the structure? Yeah, we actually can. And the problem is that anything in this area as low as 550 even is still going to serve as a higher low buy, which puts this entire market in like a buy the dip mode, which again, where we are could kind of just grind us all the way higher instead of actually getting the dip. So this is the tough spot, right? The real tough spot, back to the seasonality piece, is that this we talked about last week, kind of like how the market climbs the wall of worry. And what I could say on this one right now is, it's the fear and greed index, if you will. We have gone from fear down here to complacency, kind of in this area. We were complacent for, I don't know, a week and a half, something like that. And now we're back into, I don't even know what the fear and greed scale is. Let's see, fear and greed index. Let's see what it says today. It's on greed. It's not even extreme greed. It feels like it'd be extreme greed, but this is heavy in the greed right now. So we are out of complacency. We are out of neutral. That would be in this area right here. And listen, there we are, right? Just showing up one more time. So at this point, all bets are off in terms of the structure count, because this higher high, lower low, lower high. It's this lower high right here that has been definitively broken, completely gapping up above anything in this area, whether it could just be as small as this before we go. It could be as deep as this. It could be as deep as that. But any one of these options at this point becomes a dip buy. And so for that reason, I just don't know if the market actually gets it. But it's very hard. It's very hard to chase this one at this point, especially with where we are, options Monday. This is a very, very expensive environment. I will tell you, I did have some long swings coming into the weekend, which, because of volatility, like, I have to take them down. So there are good wins. But yeah, not options it's a tough one. All options, including your puts today, are actually all going to be elevated. It's wild. All right, so just going to take a look really quick at the calendars. Again, Trump tariff, really not a whole lot there. We got the China update. Tomorrow we do have CPI. Wednesday we have 3 Fed speeches. Thursday we get PPI, retail sales, and then Jay Powell speaks on Thursday as well. Normally CPI is a big deal. Maybe it moves the market a little bit, but it's going to be Trump headlines. Anything regarding China tariffs at this point, this is all going to be Trump headlines. This is going to supersede all of this kind of fundamental data points, and probably even whatever Jay Powell says. Friday, housing stats, consumer sentiment. So this just puts us on high alert in terms of what the trade deals look like, in terms of what Trump's true social profile looks like. And you're just going to have to stay tuned for that. Again, whatever happens, the issue is that the market is in buy the dip mode, rightfully so. But that puts us into kind of like the last week of earnings. Oh, by the way, if you guys didn't know, I'm also doing one more. This is gonna be the last one. I'll just drop this in the chat. So this is the last free trading that I'm gonna do. You guys can go ahead and register for that now. It's on Wednesday after the market's over. We're gonna have a couple earnings to trade. So we got Cisco, Walmart, Alibaba. This is more or less the end, Jack in the Box, more or less the end of earnings season. But here, if you struggle through earnings season as an options trader, like this is probably the best webinar that you can attend. It's going to teach you a lot about options in general. You don't have to take the actual trades, but it's going to be about like, how do I define what a good trade looks like? What's the most consistent way to trade earnings with options? Again, it's not going to be a YOLO training. Like, this is not some dude coming out here teaching you how to like gamble. But I would say it would be recommended if you have options like level 3 approval, spread approval. We do a lot of time spreads and things like that, but it's really about how to leverage volatility, how to know when something is expensive and cheap, or cheap, overpriced or underpriced, and how to leverage volatility as a whole to play the market and put that as your edge in the market. Again, if you understand that, like, that's just, as an options trader, this is kind of like core to your being, right? Like, to know when something's underpriced, to know when something's overpriced, and be able to see how the market changes these option prices. It's a huge deal. So no matter what level of earning, like what level of options trading you are, or how long you've been trading, everyone's going to learn something. Henry, China will make some negative comment, which will give us yeah. I mean, so the 50-day simple on SPY, that is definitively, again, a buy the dip mode. The problem is, it's like all of it is buy the dip mode. We have completely, after today, we've completely broken all structure. You could have said, hey, maybe at this point, this was going to really kind of like hold as your overhead supply or overhead resistance. And it was for a while, to be fair. It was for 1, 2, 3, 4, 5, like a week. And then we get this headline that just kind of just blasts through all of that and completely breaks structure. So the chart has changed. The chart's not broken, but the chart is now out of the weeds. It's no longer in the weeds. So that's where we are. That's SPY. Do you guys have any questions? So, appreciate you, Jill. Anybody that registered for that one, it's going to be a good one. Actually, the earnings trading system was kind of like what our whole group was built on. It was the first system that really created a lot of consistency in most people's trading, opens their eyes to volatility and how that affects options prices. But again, insanely consistent. Good enough to, like, if that's the only thing that you trade, you'll probably be a profitable trader. Nick, is that an inverted head and shoulders that pushed all-time high? It's a very light one. And the problem is, so what Nick's talking about is this right here, and it's very small in here. Ideally, it would have been deeper like this. Could still be. But this first push is like, you've broken your quote unquote, let's call it neckline. So that neckline is going to be at 576. It's this prior highs right here, this double top from Wednesday, March 26th. Yeah, this is a wild one, right? And we're just kind of like channeling up. We are at the upper end of the channel, which is why I'm like, we're just outside of it again, just at the upper end. So I'm like, it's very hard to press along here, but this could be the trajectory, a little something like this, actually. So this is where we are, right? And even if this goes all the way up to 605s and we're literally back to where we are, that might be what needs to happen for the market, and then we have a little pullback and a little chop zone. But between now and then, it is definitively kind of like buy the dip mode. So it could take us to July, could take us for a couple months actually. And who knows? That doesn't have to fail at that point. It could, depending on where market sentiment is, we legitimately could go all the way higher, right? But some sideways price action would be good for a little while. Just after a move like this is I got to be honest. This is, let's see. Let me take some of this stuff down. Just want to pull an average weekly range. Okay. So an average weekly range on SPY is this big. We've moved. Yeah. I mean, we could still get all the way to 610. Jeez. After this week's move. Look at this. This is what I'm talking about. Like this is that 576. We got very close, but it's not even trying to correct it. And I look at this and I'm like, man, I don't know. We don't know yet. I do have gap rules. So you have a session gap all the way down 565. Pre-market high is sitting at 582, which seems wild. And the halfway point between these two is here. And normally a half gap pull, we call this a half gap. Normally a half gap pullback is pretty decent, but the market has tried to kind of correct this imbalance. This is the gap here is what we would call like a market imbalance. That's the imbalance. That's down to 565. Today, at least. Tomorrow could be a different story. But today, the market has just absolutely failed to even attempt to correct this imbalance. And that imbalance correction would begin if and only if the market was able to actually break down below this morning's lows. So we can't even trade for that unless we're below 578. And I did take a couple shots at that, but look, this is one more situation where like these bears are super weak. All last week it was kind of like the burden of proof. You guys heard the phrase the burden of proof? The burden of proof was on the bears early on. They failed to deliver. Now the burden of proof is firmly on the bull side now. So so we need to keep getting good headlines for this to continue on. And potentially CPI tomorrow. Yeah, look, he could make that higher low. But for now, for this week alone, 565 is that over the weekend gap right here. What happens is that for this week, in between 573 and 571, if for whatever reason we see that, that's going to be your first area of support, even though it's not the full gap. But you cannot trade for that. And this is going to be valid for the week, right? Until we meet again Monday. We cannot trade for that until we're below, call it 578. So if we are below 578, cool. We can trade for first that half gap into 575. And then if we're below 570, this is a huge, huge range. If we're below 571 or rejecting 575, then you can trade that next level down to 565, which is simply just going to put us back to where we started last week. So a very, very crazy over the weekend gap here. Volatility is extremely high. I don't want to press any new longs unless we're over that pre-market high here. So if we do get over that, and again, sorry, I'm on a very small time frame chart, so most of you guys might not be used to looking at things like that. But it's as simple as if we're over 583, which is this pre-market high, then we can continue to make this full weekly range for SPY. First stop would be 592, and then as high as 609. These numbers are just absolutely insane. And for right now, we are bashing our head up against kind of like the center point of that upper bound in this channel here. So I'm going to pull this back just a little bit. Maybe I can clean this up slightly. So, oops. So that was an average weeks range. This is a 14-week average range, which again is wild. And so right now, if I pull this back to where we are now hitting our heads up against this. So 586, which is a pretty heavy spot. So if we do get over that pre-market high, 586 would be that first spot that I'd look for. And if it does hold, cool, we'll hold a little bit and then we can kind of go into the center line, center channel here. So personally, I wouldn't really be looking for anything higher than 595, but I do know that, if something happens, let's say on the trade war front, it's actually possible that we go even higher than that. And on average, this more recent average weekly range, geez, that's insane, would be up to 595, 60. What did I say? 609, which would be basically all-time highs yet again. That's just insane. That's just insane. Man, I've been doing these iron condors too, and I just got absolutely smashed this morning. So I'm like, I've rolled up the puts all last week, all of them. And now I'm like, I got to roll them up all again. But this move was just so much. I'm like, I don't know that I want to roll them up yet because I would really like to see a little bit of a pullback. I got a lot of short 570s deep in the money now, short 580s, short 590s. So I'm going to have to deal with that pretty soon, and everything's going to have to get rolled across the board and just kind of like reset on that one. Yeah, bears are absolutely hibernating. No question. What's up, Gojo? So that's where we are on SPY. Look, this is not something I can really chase because it's more like it needs some time to breathe. Huge move over the weekend. It makes sense for the market to kind of stall out here. Again, if we're inside this box for right now, I don't really have any interest of trading it. I just don't, right? Super small shots. It won't be until we lose like 578. At that point, I'll be like, okay, I'll trade for this kind of half gap and really like the 200-day simple, which is going to line up to about the halfway point of the over the weekend gap. And if we do lose the 200-day or reject below it, then, which is the same as the half gap, then I can look for that full gap fill. But until then, I need to see new highs on this smaller trend count to go ahead and buy it, right? So back to that kind of like breakout mode, unfortunately. And what that looks like, it's not like, oh, it's breaking out right away. I'd like to see some kind of break here, pull back. A pullback after break can be as high as like 580s, and then look for this kind of move, which, in its own right, that's a $10 move on SPY. That's crazy. Insane that we're looking for those levels of moves. It's just like, oh my God, this volatility is absolutely insane. So that's SPY. What I'm going to do right now is I'm going to pull this off and, did anybody want to look at any earnings or anything like that? Go ahead and drop some tickers now. And we have AMAT after the close on Thursday. That's tradable. I think Doximity is probably one of the largest implied moves out there in the market right now. Really seeing a whole lot. But go ahead and drop some tickers. Sam, just waiting for my blessing to show. No, I can't. Bitcoin, we'll take a look at Bitcoin later today. Also, that's definitely got to be a chart that's on major watch. But before we get into more charts, what we have to do is we have to check in with our good friend Miss Cleo and see what the tarot in TA has to say. So here we go. All right. Quick and easy, right? All right, you guys have been dropping tickers. Awesome. So every Sunday I get this, and I haven't looked at this yet. I think Miss Cleo's calling for a little bit of pullback here, or at least a breather. So last week was the Hermit. And she said that we were going to bang our heads on either support or resistance. We actually did both, and we really went nowhere last week. So A for Miss Cleo for last week. This week she's given us the Hangman, which is very similar. I think that's a very similar stance, like sideways price action. I was going to wait until Thursday or after CPI probably to reopen a lot of these condors, but Miss Cleo's she's been pretty on point lately. Monday is the 3 of Cups. I don't know what to say about this. Maybe this is after the gap, but today's price action intraday is very muted. This is a low number card, 3 of Cups. Then we have Tuesday, the Knight of Cups. This doesn't look like a bad week. And then the 9 of Wands, which is, we know Wands are very crazy movers. Lots of cups. And then, what is that? The 6 of Cups. And then a Page of Swords. What's on Friday? Do we have anything Friday? I'll have to look at the calendar after this. So Page of Swords is Friday. All right, let's see what she has to say. So for this week, and again, this is comedic relief for those who don't know. But it is wild how accurate this can be sometimes. So for the theme card this week, the Hangman. Hangman is a bit more reserved for stocks than it is for crypto. We had the Hermit last week, there you go, who told us not to chase. That was also my thumbnail, do not chase. We didn't go anywhere last week. And then the Hangman, also major arcana, now tells us that it's time to pause so that we can move forward later. Okay. I mean, I don't hate that. I can't chase this move, that's for sure, Miss Cleo, so I don't know what to tell you here. This implies chop and failed targets. Ooh, maybe she's talking about failed targets for the bears because, I don't know. But let's see where the daily cards say. All right, so Monday is today. 3 of Cups. 3 sisters celebrate an emotional achievement. I mean, definitely emotional achievement for the bulls. Feeling happy, but perhaps distracted by the drinking. Really? Perhaps distracted by the drinking and leaving themselves prone to weakness. Well, SPY's held up thus far. This card has hardly appeared for stocks, but is typically low energy and low impact. However, the news cycle has already given stocks a huge boost in the Sunday futures open. So we may be leaning into an early celebration with a bit of weakness to follow later. All right. Somehow this card often finishes flat, but I would not get short unless we notice an obvious failure. So I highlighted out earlier what the obvious failure would be. So my thoughts are not to chase the gap up, look for dips to buy, but patience is the key, not joining too early. All right, I can get behind that. Tomorrow is more important. So tomorrow, Tuesday, Knight of Cups, back-to-back cups implies back-to-back emotional outcomes. Is she? I can't tell if this is like bullish or bearish. I think continuation is in the cards for Tuesday. Okay. Trend is possible, but unlikely. So far, Miss Cleo is like, maybe not, right? Like maybe not. I don't know. If Monday is green, we are buying dips on Tuesday. If it was red, so far it's not red. We are again selling rallies here. All right. So tomorrow, Miss Cleo thinks maybe a buy the dip early, rally back up to wherever we went if we gap down. Wednesday, 9 of Wands. We're beginning a series coming back from the night into a minor 9 to 6. Okay. Look for a move in the opposite direction. Okay. So if Tuesday's a gap down, then we rally back up to where we came from. But then we're weaker Wednesday. Look for a move in the opposite direction to where we came from and probably with small to medium-sized trend. All right. I mean, if we chop all week to fill that gap, it's a big gap though. Wands are impulsive. And this is, Tuesday was CPI day. Wednesday, we really don't have anything. Wands are impulsive, so day traders will also have their fun. Get caught in a quick reset. just hold and avoid the panic. All right. Hold and avoid the panic. Thursday, 6 of Cups. We're back to Cups, which seems to be the theme this week. Continuation is once again likely, and there's a high chance that today's price action is stronger than Wednesday's. This is Thursday's PPI. Okay. The key will be to avoid getting euphoric or panicking and not getting too hard on the trade. While this card can be happy, it also suggests a trip down memory lane. Oh, I don't know, which means that the journey may be reflective. I can't. Can you guys tell, is this bullish or? I mean, what do I mean by reflective? I mean moves may repeat in the opposite directions a bit slower than the wands than with the wands. We're still trading momentum. Okay, we'll see. I mean, it would make perfect sense to kind of like pull back at least half of this at some point. Friday is the Page of Swords. We're due for some mean reversion into a day of choppy price action that tries to cut both sides to pieces. Oh, wow. Fortunately, pages often lose steam in the afternoon, which means a cleaner direction may develop. Don't play around with this one or try to be cute. If mean reversion manifests, then trade that direction all day. Okay, so if there's a trend Friday, it persists all Friday. Recap. We have a nice chance of a trend with sun continuation days that give us a chance to load up and build over a few days. So Miss Cleo even knows it's BTFD mode. Just be careful near Wednesday and on Friday. All right. Well, that's what she says. It's gonna be a quick one this week, but I do think there's a lot of charts now that we can kind of like reset on and take a look at what they seem to say. So I'm gonna go ahead and pull this up. Get this back. So just again looking at SPY, really nothing happening here. QQQ. Should I finish out the indices? Let me see. Where did I put that? Just gonna finish out the indices real quick. So from a 30-minute time perspective, yeah, we are. So the diamonds are the only ones that are rejecting the 200. I believe that's IWM is the one that's gonna probably have the most catch-up room from here. The one kind of like canary in the coal mine, I will say, is rates, right? And if you guys haven't noticed this, I don't know if it's just the market repricing what's going on, or the market repricing based on Powell's sentiment. But so TLT is what we call the long bond. And when I say canary in the coal mine, this is just like the one thing that's not adding up. The one thing that's kind of like saying warning here is this, right? And what we want to look at is like TNX. This is the 10-year yield coming up on 4 or 5 almost. This is pretty high. It's pretty hot and heavy. You wouldn't expect that this would be happening with the markets rising the way that it is. So, and I know a lot of people have actually been on a long TLT trade idea, which, I mean, quite frankly, has not done that well. We do have some lower gaps here, but I don't know. I almost feel like this could be a potential. So if there was a lot of, I'm just working it out externally processing here, but if there was a lot of people that were kind of like on the sidelines in like a safety trade, bonds would have been a safety trade. So with the market going up like this, that it makes some sense from that perspective to see money leaving bonds, which means that the yields would be going higher. And that's the only thing that would be telling this story right now, is that safety trade is really being unwound. We can see that on gold as well, GLD. So huge gap down day. But At the same time, neither one of these are really breaking down. Gold's still kind of like at the bottom of the box. 297, not a great look with a little bit of a double top there. We'll have to see how this plays out, but this is yet again another version of the safety trade, kind of unwinding. If you're worried about the market this high, I think that you could kind of rotate a little bit back into gold, maybe even gold miners. I do have gold. I bought some gold miners this morning, just GDX so as an index, just in case this doesn't hold. But those could be kind of like reversion trades if these end up popping and the market's not so sure of itself from an upside perspective. That's the only thing that makes sense. But if the market does continue to rip higher, specifically gold, this might actually be like a big short coming, which is odd, because I would have thought that gold would have broken down even more. But this is where it's sitting, like right on the bottom of this kind of area, still stuck between the 20-day and the 50-day simple. But this is a big loss for gold on the upside, from the upside momentum perspective. It's got to hold. It can bounce here, but if you lock a lower high one more time around the 20, around like 305 on gold, that's probably a better area to short if you wanted to fade this one. But if you're more bearish on the market overall, you'd probably be looking at this dip in gold as something that might be buyable for you. For right now, this is not, I'm not seeing this. It's holding. It's not quite breaking down just yet. We'll have to check back maybe midweek, but this is exactly where you'd want to see gold bounce if you're a gold bull. A lot of people talking about like Ethereum last week. Do you guys want to look at ETH? I don't even know if there was so 30-year might give us that sell off if we go to 5. You know what, before I go too deep in the charts, what I will do is let's do this. Let's take a look at Lux's. So we don't have Emp here today. Lux's Catalyst Watch. So futures green after China and the US seem to have productive trade talks. That's what we went through. That's not all that's on our plate, right? Top market events for the week below. This is bright green China. All the red is turned to green. So today, US, so this was the statement. I think that's all that mattered today, really. Executive order on drug prices. Yes, that was the big announcement from Trump. We could look at like Pfizer's deep in the red. There's a lot of people talking about like, I don't know if you guys seen this, like potential upsides on some of these stocks. We can look at J&J, we can look at UNH. I know UNH has been absolutely horrendous lately. I haven't looked at the chart today, but interesting to see. So today we had Monday earnings, Chegg this morning. Tonight, ASTS. Anybody in these space stocks? ASTS tonight. I did see Rocket Labs kind of like hovering around that same price. Rigetti, we got some quantum names. There's a lot of nuclear stuff going off last week too. We could probably look at CPI tomorrow. 1-year treasury. I don't know if 1-year treasury is going to do anything, but before market open, some of these China names, JD and SE on Oklo and U earnings Tuesday after the close. I don't know that earnings are going to move something like, oh, that's more headline driven. New, if we see requests there. OPEC monthly. So this was the weird one. Last week, we talked about OPEC Plus saying that they were going to increase production. And every time they have headlines like that, it's kind of like reverse it. Sure enough, oil right out of the box, right out of the base. I think that one, I'm still long some oil names. I think that might have a little, it's barely off the lows. 2 Fed speakers, crude inventories. Sony, is that Dynatrace? DT? I think DT is Dynatrace. I haven't heard that name in forever. This is Wednesday, so this will have our webinar Wednesday night. We'll do Cisco, and I think we have some maybe AMAT, stuff like that. CoreWeave, brand new ticker. I think it's going to be CoreWeave's first IPO or first earnings since their IPO. So I will say that there's no way for the options market to correctly price CoreWeave's earnings move. So this will, just based on sheer numbers, like statistics, there's no way for the options market to really accurately price this. So that may be one where it might actually be worth trading. Thursday, UK Q1 GDP, interesting. Eurozone Q1 GDP, PPI, right? Retail sales. This one, I mean, this is as weird as this might sound. I think that even over CPI, maybe even over PPI, retail sales might be the number that the market pays attention to, because this is just one where, like, if we're talking about inflation, if we're talking about consumer sentiment, and seeing if Powell's like ready to make a move, it's a lot of that's going to come in on retail sales, and then J Powell actually speaks 8:40 a.m. Eastern on Thursday. So super interesting, that one. Baba, Deere, Walmart, AMAT, Take-Two. A lot of earnings still to come. Interesting. That's on Thursday. Friday, last day, U.S. import-export prices, housing starts, so housing numbers, building permits, and consumer sentiment all at 10. Yeah, this is it's gonna be an interesting one, man. If we do, give Lux a follow, by the way. If you're not, I'll drop this in here. Walter's already on UK GDP flat or no growth. I don't know. So we'll see. Again, just back to this market again. This is the cues. We are not even attempting to correct this early trade imbalance, this is what I'm talking about, man. If the market doesn't even want to attempt to correct this imbalance, it is at least straight up to the highs. It's not like, and this is a tradable zone in here, but this structure after today's gap, it is definitively changed, right? This is a pop right through the 200-day. Again, from a trend count, this right here, 493, this was the last lower high, right? So for it to act as overhead resistance for a while makes sense, but this push through is like, this is a coiled spring here, like a beach ball held right underneath water, and it just pops through. To see it kind of like chill for a little bit and chop maybe even for the whole week before we really get going would be normal. Where it's stopping right now, again, kind of on an important level right in here. There's definitely some overhead resistance. Oh my. Yeah, just not an area that I can really chase. 514 is the upside kind of level here that the market was prior support, right in this box right here. Now overhead resistance, but is it possible that we just go through? I mean, I think we'd all like this pullback, but this market has not been giving it. It's just been kind of like blowing through some of these levels lately. So even something like this, it's as simple as, if tomorrow we're green, we're not correcting this. Just because there's a gap doesn't mean that gap has to fill anytime soon. We can look at this. Here's another kind of similar setup where, like, resistance on the Qs, and just blows through. We have a big continuation day and then slowly bleeds out and slowly comes down to fill that gap. That's what I mean. Like, just because it's there doesn't mean it has to fill right away. And this move is more like a full week later. So sometimes if the gap's there, it could continue higher, but it might not fill, if it fills at all, for weeks. So just be really cautious of this kind of stuff. I mean, the ranges that the market has been making, I'll tell you what, these are massive moves. I almost saw on Sunday, I was like, is this going to be a limit up day? Not quite. No, I have not done Ethereum yet. But so to that end, let's go over to Biddy coin. So Biddy, right into a pretty heavy trouble zone. Huge move, by the way, off the lows. 86 was that level of like, look, you're not going down anymore. You can get back up to 96. 103 was always that possibility where, this was that last high. So this is kind of sketchy. I think crypto has done already what the market is trying to do. So this is that lower high on Bitcoin from the breakdown, right? And then you have lower lows in this midterm count, right? And these highs, these lower highs, really follow all the way down until you get this break, which again, in the crypto land, also no pullback. So this is kind of maybe preceding what we're going to look at. This is what stocks are about here. Crypto is all the way back up to the prior highs. So maybe this is like foreshadowing what might be. But yeah, this is where you broke. So you have this here. All right, this is your 86, right? All the way back down to the balance zone. Almost fills this fair value in here. This is 73. Not quite, but close enough. Back to the highs. Even a little pullback. So a pullback to where this last lower high was. Holding. Here it is. Here's your volume shelf. Any pullbacks here on Bitcoin now, holding 96, are still going to be bullish. And I think I did this more recently. Yeah, so I've done this recently. This move here, in case we do break through, just so we have it. I don't know what everybody else's numbers are. They're probably into 120s, potentially up to 160s. But the midpoint of this extension, meaning if this is the consolidation box that Bitcoin is breaking out of, a full extension does bring this up to about 161. A 50% extension brings this right into 135s. That's Bitcoin. In terms of Ethereum, so BTC, just do it like this, Bitcoin to Ethereum. So this was the chart. This is the ratio, Bitcoin versus Ethereum. Ethereum has been absolutely outpacing. We can look at Bitcoin dominance overall as well, kind of like waning. So Bitcoin, while it's bullish, the alts in general have been severely outpacing. This if it was alt season was supposed to happen, I don't know what, in like Q2. And it's like alt season has essentially been delayed. With Ethereum here, I had 2,800. You're right up to that 200-day simple right now. When we pull this back, the last time I was on Ethereum, it was over in this area, but it couldn't get through this area right here. Couldn't get through 4K, really. And the moment that failed, I was like, all right, well, alt season gonna kind of pull off, and it's probably gonna be into some serious, in my mind, it was gonna be some serious consolidation, which, to be fair, we got into some serious consolidation, and then we broke down, retested this prior. Look at this. This is 2018 all-time high, almost to the penny, around 1,500, which would have been that kind of buy zone. But the momentum off of 1,500 was just intense, right? So very, very heavy. Right now, just taking this Ethereum chart, you could get an extension, and this probably takes you closer into 3K. But this is very likely the box that it's still in. We can't talk about an extension on Ethereum until it's like closer to the top. I'll measure it for you guys just in case. But the midpoint on Ethereum here is basically going to be 21.25, which might sound like a big pullback, but for ETH, it's not really. I mean, this has gone 90% in the last month from the lows. That's crazy. But also it's crazy for if it was a stock, par for the course for Ethereum. But around 2150 is that midpoint on ETH. That would be a decent type of area for it to hold, consolidate a little bit before it makes another move back to the upside. But again, the upside is still potentially limited because this is a equal highs area that's lower than this prior high. So the box is still here. If this does break through the box, I'll just give it to you, a doubling. Oh my God. I can't do that. There's no way. There's no way. I mean, I know the protocol's updating. I just don't know that I could say that price. That would be crazy. I just don't know that I could say that out loud. It was like 20 something. So I'm like, no way. Man, if this breaks out, this is gonna be crazy. I don't know why it would. So for that reason and that reason alone, I'm kind of like stuck on this. But the charts say 12s, but you can't really put that in the cards until you're over 5. And if you're over 5, that's new all-time high. Okay, cool, you can say that, but one step at a time, it's got to hold 2150s. It's got to hold 2150s. Otherwise, it's just going sideways. Sorry, man. This is wild. Yeah, could it be Monster? I mean, it was funny. Yeah, MSTR actually led the crypto rally. We're very close to last 4 and change. Top of the box. Top of the box. So here, if this is the consolidation on MSTR, again, these are just wild numbers. I don't feel super comfortable saying them out loud. Is 850 is a halfway point from an extension? If this is the consolidation, a full extension is 12s, but for right now, again, one step at a time. This is like years out. If this guy pulls it off, if Saylor pulls it off, I mean, kudos to him. This has been a long road for any MSTR bulls. This thing has been, volatility on this is so insane. Kind of open at the highs, right into this prior area here. The problem I have, like, unless Bitcoin just completely falls and fails, I can't in good conscience short this anymore. Like, no way. And I had in the cards that look Bitcoin before, when it was under 86, I was like, I could see 50, I could see 60s. But the second it got through that 86, not happening. And even now, it's still holding kind of like that center point. So as it comes in to 390s, this is not this weekend gap. It instantly pulled back, but you're going to retest this prior breakout on MSTR 395. Maybe it holds and goes sideways for a little bit before potentially making another move. But so far, this move is up, which would take you to 460 next stop. Downside is still that 350. That 350 was where it kept hitting its head over 350, 350, 350, 350. I mean, if you saw 350, yeah, you want to go long probably. God, did I say that? Probably want to go long if you see it, because that's going to be your major support level on MSTR. But for right now, between 395 and 380s, this is kind of like that last consolidation breakout that it looks like is going to try and come in and retest. And again, if it holds here, that's probably good enough. Yeah, coin is going to be similar. I would assume coin. Oh, no, coin is not similar. Interesting. See, this is why crypto proxies don't trade like crypto proxies. Like, even Coinbase, who I'd say it's pretty good. Bitcoin at the highs, this is 3 and change, 3 and a quarter. Bitcoin at the highs, this is 211. Like, where's the symmetry here? Like, that's not working out. Just saying. That is not working out. So this is to say that Coinbase is a crypto proxy from a trading vehicle perspective, like, where on this chart does this look like Bitcoin? It doesn't. That makes sense? Like, they're not. So they got to be treated like their own individual equities, right? And so this is not trading like a crypto proxy or a Bitcoin proxy, if you will. This is trading like its own entity. 216 right here is kind of like this center point. So yeah, I'm on a weekly scale right now. But 216, if I draw it across, that's going to be into your 200-day simple moving average, which sits around just under 230. Right now, this structure, this is lagging. This is lagging big time. I guess the people are like wondering, what am I looking forward to on Coinbase? The problem is why these don't trade like legitimate crypto proxies, because they have earnings. They're companies, right? Which looks like a double miss last quarter. But right into that overhead supply, assuming Bitcoin does get through, this could be a pretty decent sized trade at some point, because you would get back essentially into this area, and that means that you have a very big volume profile to fill right here, volume shelf. So this gap from 250 to 216 is pretty considerable. From a trading perspective, that's very tradable. But you're not going to get that trigger, I'll call it trigger, until you're over like a daily close over 216 at this point, to call it 217. Somewhere in there. Let me try and be exact for you guys. So this was the breakdown level here. You're coming up to test that. Does it act as a catch-up trade in the meantime? Oh no, it's possible. You're about to break through this current consolidation zone. This is not like a horrible like trade setup. So for right now, this looks like last Friday, opened to the highs, came back down, gapped up significantly less than the rest of the market following that poor earnings report. But the gap up was 7% early, holding, no attempt to fill this balance zone. So again, similar to the market, no attempt to fill this imbalance down here, holding that early lows. I could see this going through. Coinbase is a tougher one where I would almost like prefer to day trade it. I do day trade this from time to time. I have not day traded Coinbase for a while because it has been pretty sideways. It's been sideways for better part of 2 weeks. Earnings is behind us. It might be ready. It looks like it wants to make a move. What direction though? TBD. Pullbacks to 187, I think, become viable though. If you got something like this, then you might get a little something like that, which on equity alone is not a bad trade. So that's Coinbase. I do like that. Very big overhead gap to fill, volume gap to fill. But again, not quite there yet from a technical trigger for sure. But yeah, it is definitely lagging still. Christian, am I still in my condors? Yeah, I'm still running my condors. They're all like, after today, they got shellacked. I've rolled all my puts up. All the puts are on like short 540s, all of them. I'm gonna have to roll them all up again, and then probably Thursday reset and roll the whole thing out one more time, and just continue doing that. Eventually, this is gonna come in, but like where we land at that point, I don't know. It's kind of like TBD. I'm surprised on Amazon. This is holding actually pretty well too. Bezos did file for that sale, but this is very much like the market, back over that $200 shelf. 210 was last high. It doesn't really, unless he was able to fill all his sales out of the gate. He filed for like 5 million shares to be sold, but this is not coming down. The whole market is just, again, not attempting to fill that imbalance just yet. So really, I mean, assume that this kind of goes with the next target here on Amazon is going to be 216s, back towards those highs, but 216 again, big, decent sized wall right in here. That's looking like it's where it wants to go, though. Let me scroll back up and check out some of your requests, and then I'll run through these, and then we will call it for now. So LYFT and HIMS. LYFT at earnings last quarter or last week, just power earnings gap and holding. So this was overnight. It's still at the highs. It's slightly broken Friday's high, so that's good. It's not a big update today. Yikes. Tough one. I think you give this a 3-day rule, the very top of the box. Definitively no breakdown yet. Definitively. But it's running into that overhead supply. So what I'd say here is if you're below 15.5, this area, you're probably in trouble. That's $1 lower, $1 and change lower. You could take this morning's kind of low end, pre-market low as well. And then half back of that earnings is going to be 1470. So around halfway point, 1470. If it holds 15, that's actually pretty constructive, but not like major movers from a smaller time frame perspective. Weekly, it is a big, long, extended base, but you can be really careful on these. If you like it from a investment thesis perspective, yeah, go for it, because then your target's more in the 30s. Your targets are 25s, and then potentially runners into 30s from that perspective. But not until then. Not until it breaks out of this can we really say that that's a thing. HIMS, back to the highs, 55. This is more squeezy. I think today's move is pretty much done. So let this like cool off, cool its jets. Next move could potentially take you to 66. But again, you have to see higher highs and higher lows on something like this, and you have to see that trend just absolutely continue. Otherwise, something like this gets real tricky at the highs. But 66 would be that next upside level. Eddie Vox with AMD. All right, we'll take a look. Ooh, big continuation. I mean, this is good for. I was long DELL coming in the weekend. This looks like we're internals are pretty bullish right now. I'll just say that. AMD holding that 105. That was critical level. I think you just stick with this guy and hang on as long as you can. Next level should be 114s on AMD. Gap below is 102s. And you definitely, as long as this is holding like high 90s, this is on its way to recovery. It is not, it's broken a small structure, but the real level on this is going to be around this 115, 114 area right here on AMD and the 200 week. So this is the real level, the real test, at which point you'll have to see. But constructive, it stopped going down. This is stairs up. You just don't want to see elevator down. You got some more room though, at least to this area, 113s. Palantir. Tom with Palantir. Tricky. I mean, new all-time high. I think you just stay. I don't think you touch this right now without having like a lot of like news flow or anything on this. This has been super resilient. I think like the community believes that the Doge piece is going to be more of a tailwind than a headwind, which could be true. But this is digesting the move, which quite frankly is pretty healthy. So as long as over 110, I think you stay bullish on this guy. That's Palantir. Savage Archer. Man, you get some small caps. ACHR. Oh. Is it time? Oh, it has earnings today. I don't know what this one. The chart sets up like a breakout, but fundamentals will supersede any technicals after today. So you gotta wait on this one. LL Deckers. Yeah, I don't mind looking at this at all. These were interesting. Deckers is an old one. This reminds me of Abercrombie, A&F, right? In the same era, Deckers and Abercrombie were absolutely ripping. And then they just had this huge fall. And I mean, like, this probably went under the radar for most people, but this is like he's cut in half. A near 60% drop from the lows. Finally breaking structure. This is a lot of China exposure. So the China deal is going to have a lot of impact on a company like Deckers. I don't know how much they're going to be able to say coming out of this. But if it can hold 130s, this is right back into that trend that it came out of, right? So 135 is kind of like your major breakdown area right here. For now, that's going to serve as your overhead resistance. If you do get up through that, then I think you can start to look at 160s kind of for the center point again as your next upside target. And you kind of just like roll it up. And if it can hold in the 160s, then cool. Over 170, you're going to go back to all-time highs. Seems like a long ways away because it's a 130, but $40 from there, so that's like 30% on equity. That would be wild. That's Deckers. SMCI. I had DELL. I like DELL, right? Oops, sorry. I'm on DELL. SMCI. Not looking like the DELL chart at all. I guess. I mean, this is very much still in the box. I just don't. DELL has earnings. I don't know why you would want SMCI over DELL here. I came into today with $100 calls on DELL for like Friday expiration. Closed them all. And I'm thinking I could potentially roll up to 105s. When is this? And I had them short dated because I can roll into 105s because Thursday the 25th is earnings, 29th. I'd have to double check that. But if Thursday is the next earnings, I mean the 29th is, then I can get next week's 105s. Yeah, I can confirm. So I think I'll roll my DELL calls up. Just like what strike? Maybe 105. Oh yeah, I could do 105 for next week, easy. Oh, that's this week. I could do 105s. I could even do 110s if this wants to get all the way back, because I think that sentiment might have shifted. At least the price looks like it's shifted because DELL is not in the box, unlike SMCI, which is very much still in the box. Sorry for doing a would you rather or whatever on that. Cyber isn't cyber. Oh no, I thought that was an ETF. CYBR. Same earnings tomorrow. I mean, it's a tough one. Consistent beats across the. I mean, this looks like just a good chart in general. As I look at this, it doesn't look like there's massive moves from an earnings perspective. One here, but pulled back. I think you just stay the course. And if it gets sold off, then maybe you add into a little bit. There's nothing wrong with this chart. I don't know this company that well. Yeah, and I can't speak to fundamentals on this. So I mean, earnings they're gonna matter a lot on this guy. TSM though, do a quick time check. Yeah, over the hurdle, over the 200, right back into that overhead supply. I think it could go a couple more bucks for right now. This is what I'm saying. All of this is like, ooh, similar spot. Pullbacks are better, but do they have to happen? They've not been happening. Not really. And the pullbacks are pretty muted. Like this was a pullback actually. So some things got the pullbacks. TSM got the pullback. I think you just continue. Like this is a trim spot where you take a little bit of profit if it's a trade. If it's an investment, you just let it ride and look and wait for 200 to come on TSM. VG, no man, I'm not doing that one. I don't know VG. Merck, I will take a look at. So this is the biotechs. Across the board, these things have been absolutely beat up. Merck is probably one that's going to go right into that cupboard. Holy crap. I'm looking at $80 on Merck. That just does not sound right. Right into pretty heavy support from a technical perspective. So, I mean, this looks more interesting than anything. Boom, right on it. So this is that volume weighted price. This is a 2018. This is a 4-year consolidation breakout and retest. I mean, talk about long term. 4-year consolidation breakout and retest. I think you just go for this, man. Honestly, I think you go for this. I would rather Merck over Pfizer over. The pipelines matter. I don't know Merck's current pipeline because I'm not into that space, but the chart looks ready. That looks like a perfect little liquidity grab tonight or early this morning, bouncing strong out of the gate. Again, without knowing the pipeline, this chart looks worth it. I think ABBV might be. Oh my god, all of these huge recoveries, and maybe ABBV. Just if you're longer term, this one gets you a better div. Get you paid a little bit more. And the other one was J&J. Kind of a laggard of the group here. But it looks like you got that spot this morning. Wow, a lot of these have moved so fast. So out of the gate, biotechs were the dip buy for sure. But this is what I'm talking about. Like these are big areas from a technical perspective for all these charts to kind of hold. Look at that. Right in here. And if these can kind of break out, the type of breakout that this could yield could be pretty important, especially since this, something like in J&J, not one that we normally trade, but this was a higher high. This little double top was a higher high. And this holds as a firm low. It's a very firm low here. And a higher, softer low. I just gotta say this looks good. So I might be looking into this space a little bit more for this week, for sure. You guys, dude, VG is one that I don't think you could chart this. This is supposed to be like a 10-year play or something. It looks like a reversal, but I don't think you're about it's if you're in this, I think you need to be in this for like the 10-year thing. RIVN. Rivi looks good, man. I'm not selling. Right back to the highs. 15 buckaroos. Right into that overhead resistance. Scary. That prior breakdown area here, about 15 and a quarter. That's where we are. That's where we are. Technically, look at this. Whoa. Technically, oh man. I'm just gonna stay put. This looks good. Technically, this is over the prevailing downtrend. For the first week, I almost want to say ever. For the first week in 3 years. First week in 3 years, RIVN is officially out of the prevailing downtrend. What a journey this has been. I'll tell you what. I feel like a SoFi investor in RIVN. But that is a good technical look. I don't want to get over my skis. She is not stopping. This was not an egregious gap up over the weekend. I'm happy, man. I'm not adding. But weekly count, first time. Oh, yeah. That is crazy. First week. Yeah, that's definitive. 1 week does not make a trend. So I don't want to get too excited here. But I mean, holding this 14 is important for Rivi. It's just important. So cool. That looks good. Boeing. Something about the president accepting somebody else's airplane this morning, since Boeing's late on Air Force One, not affecting the stock. Again, I think the lows are in. I think you go long term on this. Look at this. This is what we call a megaphone broadening formation. These were the buy zones. I mean, my first buy zone was in here, 145. This looks good. You're right into that center line though. So right back into the middle of this prior broadening formation, massive consolidation. I don't know that you press the bet unless you just want a DCA to DCA because your target's in the 400s, or 300s. But yeah, I think this is slow and steady wins the race here. Nothing really to do, but hodl. I think this is well on its way. If you miss these entries, I'm sorry, I don't know what to tell you. But yeah, slow mover for now. Looks good. TTD. See Shopify? Shopify was up like 10%. Oh, this is a nice $80. That's a big time reversal. That is a big time reversal, TTD. 55 to $80. That's massive. Absolutely massive. So whatever was happening, keeping the stock depressed is gone. $60 to $80. That's a huge move right back into the range. Let her breathe, man. Congrats on that. This is a huge move. power earnings gap and reverse and continue, really, but to a difficult level. So, wowzers. Congrats. Target acquired on this guy. Cannot press that. She's going to do Apple. I'm long Apple. Because last week we were talking about Apple being that exact kind of pullback entry that I was looking for at the index level. Look, here it is. I'm not trimming. This provided this dip right in here, provided the type of entry from a risk reward perspective that was absolutely picture perfect. Had the indexes, had we gotten this at an index level, I would have said the same exact thing. If you went in day one, you're probably upset day two, but look at this now. Look at her now. Long and strong, baby. 208, big deal to get through. I think we see that 220 at least right in here. Happy. 219. 219 is your next spot to get to. Ready to roll. This one provided the perfect entry, though. Absolutely perfect entry. It is Apple. Probably one of my best performing tickers from a trading perspective, believe it or not. Yeah, that was no, we did not do NVIDIA. 221 was the level. Here we are, 222. 122. 123 we know is that like $3 trillion mark. I don't know why this never stays. 3 trillion. That's at $123. We're there. Look at that. 3 trillion. We are there. If it holds, that's 131 for next stop on NVDA. Also, earnings to go. If I just connect these last three highs, you're right at the top of that range as well. 3 trillion. We know this is massive overhead supply resistance. We know that's a massive like pivot area. 130 would be your next stop to the top of this kind of balance range or middle of that balance range. Let's take a look at the weekly. I'm just going to take a quick fib here over the 50. Yep. It's giving me the same area. So around 130, if this holds, we have not broken the prevailing downtrend yet on NVIDIA. You are actually battling it as we speak. So unlike the market, NVIDIA is definitively lagging, like a Coinbase, lagging. But this has earnings to look forward to still. I've been hearing a lot about Hertz lately. HTZ. I don't know what's going on. Is this public again? Well, I mean, it's public. Is that a pink sheets? No, it's NASDAQ now. Relisted? Interesting. That held a half gap from Ackman's entry. It's holding pretty well, holding that 20-day. I think this looks good as long as it's over 6. It's constructive as long as it's over 6. Then you're probably looking for like 12s, I would assume. Yeah. High 11s. Not necessarily 14s yet, because you got to get through this 12 initially. Weird looking chart, though. Weird looking chart. Deadlift and hams. Is executive order? Yeah, I don't know. This is one where this has just been, yeah. Well, so insurance is definitely acting different than biotech. This needs to stop. Like, this needs to chill out, like yesterday at 380. UNH has not seen a green day, I mean, like, at all, since the earnings report. Not a one. I mean, what is that? Maybe 1, 2? What? Like, dude. This has got to get back over it. Absolutely has to hold 385. Otherwise, 350s look, or near 350s look like it. But, you know, the one thing I can say is that the candles are getting smaller. So, like, the selling is not nearly as aggressive as it was. But I still, I'm just not liking the looks of this. But is this one of those charts where it's so bad it's good? I don't know. Sorry, I have to get, my mouse is like too touchy. Yeah, 385s, man. This is that last pivot breakdown, 380s. It's every day is like a new low. Even it's like a couple bucks. But this one is beat down. I did buy it, but it is not going up. About like 390s. And it's just gone lower still. I'm like, oh man. I don't know. Maybe there's something wrong with the company. There's something wrong, it says. Nuclear, LEU. LEU. I don't know this one. I know NNE. Nano nuclear. Chart looks good here. Not NEE. NNE. Nano nuclear. Oh, also constructive. That looks ready. Oklo with earnings. I don't hate NNE again. It looks good. Nuclear is hard to trade. Very hard to trade, but constructive spot for sure. I did go over Lux, so it'll be in the timestamps. He's got a cover for Jordy. I'm gonna scroll way down. You need to do Apple 215 end of week. I don't know. No, I'm gonna do hoodie, then we'll do Tessie. I wish that I would have gotten assigned my 38 puts. I'm a little sour, no lie. This thing, listen, you guys, our friends, my friends, who all went to that conference and stuff, I think they were on blackout periods because of maybe some stuff that they saw. And then all of a sudden they all start buying at the same time. Like, now they're not on a blackout period. I don't know what they saw. But I don't know. I feel like I'm going to resort to just going back to daily dollar cost averaging on this because, like, now it's getting away from me. But I mean, it's still my largest position by far. I'm a little concerned. I don't want it to get too big, but my God, this is a great looking chart. I mean, like, for real. The beta is just like, it's just absolutely insane. That is true. So I put some orders out at like 50 little 47s. This was today. Let me see. I just put them out all. I splattered them. What I put them at? 47, 42, 45, and 50. I'll buy it at each level. 47 was this area right in here. So that's $50 support. We know it wasn't like didn't last that long when it was. Then it was resistance. Then it was support again. And we're back in that 57 range. I'm like, oh man, this thing looks like it's going all the way. Halfway, if this consolidation breaks, the halfway point's just over 85. And a full doubling of this area is like way up there. I don't know what's going on here. Yeah, full doubling. It's like, I don't see how that happens. But it's at 85 to 100 within 2 years. That's where I'm at. I mean, this looks good. So anytime I get to buy in this area, those are where my orders are sitting. I don't know that I get it. But if I do, I will. Simple as that. This just looks good. It just looks good, guys. And the market's doing good. Crypto's doing good. Hoodie's going to continue to do good. So I like it. Micron did do a little bit of a breakout. It was a big move this morning. This was one last week. We're looking at possible 85 moves. We got to 85. This is actually one of the stronger stocks in the market last week, gapping up into 95s today. Again, you gotta like chill out on this guy, but it was very similar, but hadn't even broken up through the trade war zone on Micron, which was down in here. So taking that long last week would have been a great play. And then runners from here, I think you guys kind of see where it goes, but everything's gone a bit far. Tessie I did not do. I'll do this one, and then I'll close her out. Tesla had 330s on this move. I think I posted this potentially looking for a higher low. Just went. Sorry. Let me go ahead and connect all of these guys. So from here, all this was prevailing downtrend, broken through the 200-day, gapping up over the weekend. Right here's that first stop. It's at 320. If we take this from swing high to swing low, and just find out where the mid place, it's still in that 350. So 330 to 350 would be the upside kind of target. And this is what I've been talking about in terms of a potential bounce on this guy from a large percentage from an equity from 290 up to potentially in the 330 zone. Oops. Very much possible. Here we are at 320. We're more than halfway there. First stop though, right here. And this is where we are. So can it just continue to go up into the 350s? Yeah, it can. If we do get over 350, we are probably going into 390. Simple. And we do have this little session cap to fill at 400. That's not for weeks to months, but that would be that seasonal move. It is summer, so the market now it's summer, so the market's going to start to slow down a little for a little while. Volume going to dry up as people go on vacation and things. So moves can happen on low volume, like big moves, big sustained moves can happen on low volume with, and I'll just call it here. Big moves, big sustained moves can happen on low volume. Doesn't mean that they always like stay that way. Eventually they'll get pulled back. And we see that like on like these kind of things. That's a low volume move. And I think SPY, as I remember it, it was like early year. We would get a lot of like low volume rallies that just kept going and going and going until eventually, we pull back, right? Which turns into that September pullback. But that's where we are. I think in general, look, the market cannot be stopped, right? 5 weeks ago, Analyzer bought more hoodie. The $29, now he's up 100% on equity. Yeah. You know, my favorite stock, man. What do you want? You want to do one more? What's yours? Go, Joe, quick, drop it. We'll do the last one. I'm going to give you a couple seconds. Going once? No, Juju. It's got to be Gojo. Anyways, hit me up tomorrow. I'll be on with our boy Amit. I believe we'll be on Technical Tuesday. Oh, no, I did cyber. We did cyber. We already did that one. It's in the timestamps. It will be in the timestamps. All right, guys. But for now, that's a wrap. I appreciate everybody for showing up, and I will see you on the next one. Peace out.